Hello, and welcome to AFSPA Live, our monthly digital broadcast designed to give AFSPA members and eligible federal employees a place to ask questions and get answers about past AFSPA Talks topics, their benefits, and wellness needs. There are 3 primary ways you can join our broadcast. Join us live by clicking the link in this video description and following the instructions to allow access to your camera and microphone. Then, a show moderator will be available to assist you further. You can ask your question through the chat box on whichever social media platform you're streaming AFSPA Live, YouTube, Facebook, or LinkedIn. If you're not able to join us live, call our toll-free line prior to the broadcast at 888-435-0757 and leave our team a voice message that we may play back and answer live on air. Just tell us who you are and the question you'd like us to answer. I'll see you at the next AFSPA Live.
Hi everyone, welcome to AFSPA Live. Is our live Q&A session that we have every last Thursday of the month. My name is Maddie Norton, and I'm excited to be hosting today. I'm a communications coordinator at AFSPA, and today we will be discussing federal long-term care insurance programs. And we have, as usual, our COO with us, Kyle Longton, and we have our special guest, Tammy Flanagan from Retire Federal. You may recognize her from our couple of podcast episodes and our most recent one that we've done with her. And we are ready to get started.
All right, yes, and I am going to be taking a back seat today and learning myself. We're lucky to have Tammy's expertise. If you don't recognize her from our various interviews with her, then you'll recognize her column at GovExec, her appearances perhaps at your agency, or one-on-one interactions you may have had where she's advised you on your own retirement plans as a federal employee. So Tammy, I can't wait to hear even more than we talked about on the podcast last week. So Maddie, I think we're ready.
All right. So just to kind of throw you an easy one today, I would love to start off with, what is the purpose of federal long-term care insurance programs?
Well, first of all, thanks for having me today, Maddie and Kyle, and I'm happy to be here to answer questions from your listeners about this program. I've been involved with the long-term care program pretty much since its inception back in 2001, and I have even gone through training where I am a qualified speaker on the program as well. So I'm really happy to be here and hopefully can answer some of the confusion and some of the questions people have about planning for long-term care. So the federal long-term care insurance program is just that. It's insurance to cover the cost or to provide a resource should you need care. And long-term care is kind of defined in 2 different ways. It's either where you need assistance with activities of daily living, which are described as dressing, bathing, feeding, toileting, and incontinence, all the things that we hope we never need assistance with, but certainly if the time comes when we do need that help, it's expensive to pay for it, and otherwise it's provided by our family caregivers, who that can be a pretty big burden to place on a spouse or a child or a neighbor or anyone who's willing to step into that role. Now, the other reason why we may need long-term care is for supervision. We all are familiar with illnesses of aging, sometimes that result in dementia. Alzheimer's is probably the most famous or infamous of those illnesses of aging, but there's many forms of dementia where we find ourselves in a position where we can be a danger to ourselves, in some cases even to others, because we're not in our right mind, and we need that supervision to make sure we're safe and we're protected. So this is why people buy long-term care insurance, because this insurance will provide that resource. It provides money, right, that we need to pay for a caregiver, whether it's someone who comes into our home to provide that care, or whether we find ourselves living in assisted living facility or a long-term care community of some sort, whether it's nursing home, assisted living, or even a continuing care community. So that's what the insurance is used for. It provides that payment or that resource to cover some of the cost of the care. Normally it doesn't cover the full cost because that would be very expensive, but it does provide some help in covering those expenses.
All right. And I know that that's something that my parents are actively talking about and love to bring up to my sister and I. Like, are you going to take care of us when we get older? So I know it's something that is on a lot of people's minds. And I'd love to know more about, how does federal long-term care insurance program differ from private long-term care insurance programs or options?
Right. It's actually very comparable to a private long-term care policy. They're all pretty much got a lot of similarities. They all generally provide in-home care as well as what we call facility care, whether it's nursing home or assisted living. But obviously, most of us want to receive care in our homes. We don't want to move, to the home, as my mother used to call it, going to put me away in the home. So we'd rather be at home and have a caregiver come in to see us. And sometimes that's available even just a couple hours a day. Maybe we just need help getting dressed or bathed in the morning, and then we can be left alone for the rest of the afternoon. So it's not always full-time care. So both federal plans as well as private sector plans provide those flexible benefits where we can use that resource to pay for care in any setting for the most part. I think one of the things that distinguishes the federal plan from other plans that are out there might be, and this isn't true for every plan because some of them do provide international benefits. And I know with the foreign service group, some of you may end up living overseas in retirement, and a lot of plans will not cover the cost of care overseas. But the federal plan does. In fact, they gave me one example once of a parent who had purchased the policy through the federal program, and he lived in China. He was Chinese resident, and that's where he lived, and he needed help. He needed care. And the way you qualify for care is they usually send out an independent, it's usually some health professional who will figure out, does this person need assistance with those activities of daily living, or are they in a situation where they have severe cognitive impairment and they need that supervision? Well, they didn't really want to put out the resources to send someone to China, so they relied on the family members, the physician, and anyone they could talk to that would certify that family member needed care, and they approved the policy. So international benefits can be a big help for certain people. And also it provides that informal caregiver. So in other words, if I needed care someday and my daughter-in-law or my son lives close by and they want to come and provide the care in my home, or if they invite me to live in their home, heaven forbid is probably what they're saying, but if I should move in with them and they become my caregiver, this policy would pay the benefit to them at the going rate, standard rate for a caregiver in the home. So it can provide benefits for both informal care as well as international care as well. And another benefit, and I know some plans have these, whether it's private plans or federal, they also provide some benefits for aging in place. They'll provide a certain amount of coverage for home modifications. If I need a ramp to bring my wheelchair into the house, or widen doorways, or provide any other type of arrangements in my home so that I don't have to move outside of my home. It also provides generally about 30 days worth of benefit amount to pay for those home modifications, as well as caregiver training. So it's worth comparing. There's nothing necessarily that special about the federal plan. In fact, right now, if you were in the market for long-term care insurance, the federal plan's not currently available to new applicants. OPM put the program on suspension December of last year. So this will be the first full year that you haven't been able to purchase federal long-term care insurance. The suspension is expected to last another year. That's not a definite date, so it could come back on the market sooner or later, depending on what OPM comes up with. They're trying to find a way to stabilize the premiums without these regular increases that we've been seeing every 7 years with the program. But yeah, certainly if you're in the market, shop around, talk to an insurance broker, talk to your financial advisor, get quotes from any company. There's only a handful of companies that will sell individual policies on the market. You might find Genworth, New York Life, MetLife. The federal plan is underwritten by, it slips my mind at the moment. I want to say New York Life, but that's not
John
true.
Hancock.
John Hancock, there we go. And a slip of the mind. But yeah, they may sell you a policy individually as well. So it's not a matter of who you buy it from. It's that you have it and you have a need for it. You can afford to pay for it.
And I just want to add that AFSPA, in addition to partnering with Tammy for her expertise, we do have a group called Long-Term Care Consultants that we partner with based out of Richmond. All they do is advise individuals on their long-term care needs. They can look at your existing plan and let you know, hey, what do you, how does this work? I had somebody ask me yesterday, I've got this plan. I don't know, does it work overseas? How does it work? They can walk you through that. They can also sit down, look at your needs and your desires. If it's aging at home, if it's getting care overseas, whatever, and help you. A few groups out there that will still underwrite these plans for individuals, because the market is in has changed a lot from when these plans first came out and when they were really popular. I think Tammy, they came out first back in like the 70s, but really were popular in the 90s is sort of when the game.
Yeah, and the old plans, those old plans from before the year 2000, basically were oftentimes plans that only provided care for anything but dementia. So, if you needed it for supervision, you're out of luck, or, there was much more restrictions. So today's plans are more flexible. They do provide care in the home, but as a result of that, I don't think the whole market understood how many people are actually cared for at home for many years before they end up in a nursing home. And that might have been part of the reason why these were priced so poorly and had to have these increases, every so often. This isn't unique to the federal program that they've gone up in price. This has been in private plans as well. People who bought policies outside of the federal program are getting the same letters about the increasing prices. But despite that, I would never recommend dropping the policy, because you've already paid for it for a number of years. And you hope you never get your money's worth out of it. With any insurance, we don't want to get our money's worth. But by having that, if you should need care, even if you never get another increase in your benefit, at least you have a certain amount of coverage to get you started, to get you through that crisis period of that fall that results in the loss of independence, or the stroke that resulted in paralysis, or any type of sudden onset of needing that type of care. It's such a big peace of mind to have that kind of coverage.
All right. And you mentioned, the talk of like how plans have been increasing, and especially with inflation nowadays. We did have some members ask, are there any inflation protections or protection options available to policyholders in federal long-term care insurance programs?
Yeah, there are. In fact, most people who hold the federal policy hold the automatic compound inflation option, which initially was an increase of 5% per year if you added that option, which is a pretty decent increase. It still didn't necessarily keep up with the increasing cost of long-term care benefits, but at least it provided some value to that policy over a long haul. Now, the people who are getting the letters from the federal plan that are saying, hey, the price is going up in January, but we're going to offer you different options so that you can keep your price about the same as what it is now. And one of those options they're offering is a lower inflation protection. For instance, in my plan that I have the federal plan myself and my husband as well, initially I had the 5% inflation. The last time they raised the price, I lowered my inflation protection to 3.9%. Now this time around, they're offering, I think it's 2.75. So what I did was I called them up and I said, hey, would you consider, it's like, let's make a deal. I said, instead of lowering my inflation protection, can I keep it at the same amount, but then lower my benefit period? Because I have 5 years of coverage. So I said, what if I only took 3 years of coverage? Because the whole thing with long-term care insurance, if you think about the fact that short and fat is better than long and lean, that's a little good motto to keep in mind when you're pricing out these policies. And what I mean by that is if I had less benefits, shorter policy period, only 3 years instead of 5 years, but I kept that inflation protection a little bit more generous, a little fatter, that's going to pay off in the long run. Because let's say the day comes when I'm 85 and I need care, I will have a bigger daily benefit by protecting that inflation protection. So if I only need care for a short period of time, it may cover more of that care. And if I need less care, let's say I only need 4 hours a day in my home and I don't spend my daily benefit, that policy can still last longer than 3 years, because it's really a maximum lifetime benefit that's a result of your daily benefit amount multiplied by your benefit period. So in other words, if I get 3 years of benefits, 3 years times my daily benefit of $230 a day, that's my maximum lifetime benefit, no matter how I spend it. So I don't necessarily have to spend the whole $230 per day. Spend it slower.
Nice. All right. And then our next question would be, are there any waiting periods or pre-existing conditions that limit or pre-existing condition limitations in federal long-term care insurance programs?
Yes, and this is why, when I talk to groups of employees, especially if it's a pre-retirement group or even a mid-career planning seminar that I teach, I always bring this up to say to people that, this is something we don't ever want to have to pay for, this cost of care, the cost of insurance. But the younger you are when you buy into it, not only is it less expensive over the long haul, but you're more likely to get approved. Because even with the federal plan, there is underwriting. So they're going to ask you questions about your health. Are you diabetic? Have you already been diagnosed with any type of illness of aging in particular, such as Parkinson's disease or Alzheimer's disease and those kind of things, which would preclude you from even getting a policy. So you want to buy this when you're healthy and you don't have those pre-existing conditions so that you can actually get into it. And then when you buy into it when you're younger, you're always going to get those increases to the price based on the age when you signed up rather than what your age is at the current time. Like for me, I signed up when I was 47. I'm now 65, but I'm still paying considerably less than if I had bought that policy at age 65. I couldn't afford it, the same policy I have today, if I bought it now.
And you bring up a great
part of that. I forgot the first part, Maddie.
No, that was good. That was good. And that is a question that we had from a member who said, I'm almost 33, but I'm in relatively good health and hope to live another few years or more. I assume that long-term care would be too expensive for me now. So do you have any advice on more modest alternatives that aren't as expensive?
Yeah, I was looking before the program today just to see, like, if somebody was older and hadn't bought the policy, could they still get in? And yes, they can, if they are insurable, if they don't have those pre-existing conditions. But I did price out an average premium for an 85-year-old. And again, this isn't the federal plan, but this is just in the overall marketplace. And they showed a premium of $11,000 a year, so almost $1,000 a month if you can pass the underwriting. But that policy would pay an average of $14,000 a month in benefits, which should cover most of the cost of care in a facility. So if you're willing to put that much into it, not knowing, if you've already made it to 83 and you don't have a need for long-term care, your likelihood of needing it is probably more than 50-50, but there's a chance you'll pay all that money in and never use the policy. So some other things you might want to do or consider is just looking at things such as your living arrangements. Have you got rid of those scatter rugs that you can trip and fall on? Try to avoid all those things that can cause an accident that would result in a fall. That is oftentimes the reason why people need long-term care. Believe it or not, a fall when you're 85 is a lot different than a fall when you're in your 30s, for sure. Now, you ask me, I've had falls in my later years, and it's a lot different. There's also a lot of things you can do with modern technology. There's electronic monitoring, the old thing that you push the button, I've fallen and I can't get up, but they've had other types of electronic monitoring that are even less conspicuous. Watches, Apple Watches, for instance, provide the same type of monitoring as well, and other smart devices. People can now grocery shop from their home, so you can have Instacart bring your groceries to your home. So there's a lot of things that you can do now to age in place where you have these services that will help you prevent, going out when there's snow on the ground and the roads are icy. So, stay home whenever it's like that. So do everything you can to make your home a safe place to age in place. And hopefully you have people nearby who you can call on when you need assistance, or who can check in on you to make sure everything's okay. You don't necessarily have to have a long-term care policy for any of those things.
Absolutely. And we are very lucky today to have all the technology that we do, just like you mentioned. And I definitely think things are a lot different, a lot better than they used to be because of that.
Absolutely.
We have a question from YouTube. Seth has asked, did FLT CIP agree to lower benefit amounts and keep inflation increases?
Oh, when I called them, yes, they did. I was asking for 4 years instead of 5, and they kind of let's make a deal. We'll give you 3, not 4. But they did send me a letter offering me a version of what I asked for. So yes, certainly call them if you want to ask for something different. It's not guaranteed that they'll offer it to you, because in my husband's case, he only has a 2-year policy. It already has a low inflation protection because he bought his when he was older. So they wouldn't offer him anything different, which is fine. He can still keep his policy at the rate that it is. But yeah, because I had a richer policy, I was able to negotiate a little bit more. So yeah, like my father said, it never hurts to ask. The worst that'll happen, they'll say no. But in my case, they did agree.
Nice. All right. And we're going to move on to some more member questions that we had submitted. So someone has said, I want to receive any long-term care at my home on a permanent basis. I do not want to be in a nursing home. Will I be covered for at-home care by my policy?
Yeah, the federal policies do provide in-home benefits. There was a time, however, that the older version, I think it was version 1.0, only provided a facility care policy. So if you have that policy that's facility only, it does not, unfortunately, provide for care in the home. However, if you have what's called either an informal caregiver benefit or an in-home benefit, then you would have that option. So the best advice would be to call the long-term care program and get that information for sure. Or look at your policy, but it might be easier just to make that phone call.
And kind of on the same lines, someone has asked, how can someone make changes to to their policy, such as adjusting their coverage or addressing concerns that have changed or their circumstances have changed? Is the same thing kind of applicable to call and just talk to them?
Yeah, people are on duty there. I think it's 9 a.m. to 7 p.m. Eastern time. So they have a pretty long period of time when they have live representatives, and it's not a long waiting period usually. So you can usually get through and talk to someone. They're very pleasant. They're very willing to speak with you. So I would say, write down what you're interested in doing in front of you, have it kind of ready to go so you don't waste your time or theirs, and figure out what it is that you're trying to get answers to. And you'll find that they're very helpful.
Right. And another member has asked, in your professional opinion, as the subject matter expert today, is the LTC Fed still the best game in town as far as long-term care insurance is concerned?
It's a very good program. It's very comparable to what you'll find in the private market. So I'm very pleased that I bought the federal policy, but I've talked to friends. In fact, I'm staying right now with a friend in Tennessee who has a private policy. Even though she was a federal employee, she purchased a private policy, and hers is very good policy as well. So I don't think whether it's through the federal program or through a private company that's going to make or break the benefits that you might have. But I have seen people who aren't aware of their policy benefits to begin with. For instance, I'll meet people all the time who says, oh yeah, I have long-term care insurance and I pay $100 a month. I said, well, how much coverage do you have? And they have no clue. Or what's the benefit period? I don't know. So be sure you look at your policy. There's usually an overview statement when you get your notice that either you're paying your premium or that you're seeing an increase. And it's going to tell you, here's your amount that you can spend on a daily basis. Here's the length of the policy period, whether it's 2 years, 3 years, 5 years, or even unlimited. There's some older policies that were unlimited. And here's your maximum lifetime benefit. And that's going to help you understand how much coverage you have. And if you read through the first page or two of that policy, you're going to find out if it provides in-home care, does it provide a caregiver training benefit or home modification benefit. So read through it. Usually they're in fairly plain English, but if not, call the number on your policy, whether it's the federal plan or a private plan, and have someone explain it to you before you need care. Don't wait until the crisis hits to find out what kind of coverage you have. And maybe share that information with a family member. So if you ever need care, they know who to call and they know how to make those arrangements for you as well.
That is a great point. All right. And then someone has asked, are there any tax advantages associated with enrolling in a federal long-term care insurance program?
Yeah, so it is tax qualified, which means, I know when we lived in Virginia, we could write off the cost of the long-term care insurance from our state income tax. Now in Florida, where I live now, we don't have a state income tax, so that's not a big deal. but it's also tax qualified on the federal level, which a portion of it is available to reduce your taxable income as well. When you receive benefits, when you're actually in claim and it's paying the benefits, those benefits are not taxable. So you don't have to pay tax on that money as income and then just have to put most of it back in taxes. So it's tax-free, as kind of like life insurance would be. So it's a tax-free benefit when it's paying the claim.
Oh, great. And that was a similar question we had from someone asking, are the monies I receive via claims on this policy taxable? So now you know. Now there's your answer. All right. And then I want to reiterate something that Tammy had mentioned at the top of the live show, that the federal long-term care plan, you said, is the only one available for members overseas specifically, right?
Well, it's one that is available overseas. There could be other private plans. I forget which one I was talking about with somebody, and they said, oh yeah, this plan also provides benefits overseas. But that's a question you might want to ask if you're planning to retire overseas, or if you're providing insurance to maybe a family member, parent, then you want to make sure that it will cover them wherever it is that they live. So that can be an important consideration for some of us. Most people don't need that, but it can be very important if you do.
And I'd love to ask something that we talked about a bit before we started the live today. But you were saying that federal long-term care contracts renew every 7 years. If you could talk a little bit more about that. I know we had some questions from members about what to expect in 7 years' time, and what increases or anything like that may occur.
Mm-hmm. Yeah, so we are at the beginning of a new 7-year contract that was signed this year. So the federal long-term care program will continue for the next 7 years. And those of you who have versions 1 or 2 will have to make your decision about how much you want to pay for the policy starting in 2024 by November 9th. There's a deadline of November 9th where you have to return those letters that you received, or go online and access your account at ltcfeds.com. and let them know, do you want to lower inflation? Do you want to lower daily benefit? Or do you want to keep things the same and pay the higher rate? So anybody with versions 1 and 2 will have to make that decision. Now, as far as the next 7 years, I've heard a lot of people concerned about, is this going to happen again in 7 years? What are we going to do if this keeps going up? Well, one of the things that's happening right now in interest rates, if you've noticed at your bank, you're finally earning some interest on your savings accounts and money markets and CDs at the bank. Well, those are safe investments, which is what insurance companies have to invest in, is rather safe investments. So seeing that those interest rates are starting to go up again for the first time in a long time, that's good news for the fact that we may not see as much, if any, of an increase over the next 7 years if that continues. So that's one of the reasons why these rates have gone up. Another reason, of course, is utilization. There have been a lot of people who have bought these policies who have gone into claim. I guess that's good news, the fact that they are actually using the policy and getting their money's worth. But it's bad news because insurance doesn't work if everybody who buys it uses it, because it's kind of pooling all your money together. So that's another reason why those rates have gone up. But you always have choices if you face a rate increase, just like we're facing right now. So you can keep your premiums the same by kind of reducing some things about your benefit, or if you can afford it, accept the increase and maintain the value of your current policy. So luckily, we're at least given some choices. No one's happy about the rate increase, especially OPM. They're the ones that put the kibosh on new applications. But hopefully they'll come to some agreement as far as how to make this more stable, as far as premium stabilization. And if anybody bought a federal policy in 2019 or later, I think it was September of 2019 when version 3 came out, that policy already has premium stabilization features included. So, there's a death benefit payable. There's a reduction in premium at age 85 with that policy. So that was already in the works when they put out the new version back in 2019.
Good to know. And we have another question from a member on YouTube. Laura has asked, if you need to use the plan overseas, will you need to pay up front and then get reimbursed through the plan?
Good question. Yeah, I believe that's true, Laura, but I'm not sure. So I don't want to answer that 100% because I really don't know. I'd have to look it up. You can call them up and I'm sure they would let you know that. I can also look it up and I'll get back to Maddie or Kyle and let them know as well. That's a good question. I'd like to know the answer to that myself, but I think you might have a point there. That might be the case, but I'm not 100%.
Absolutely. And if you're looking for even more information about the federal long-term care insurance programs, Kyle and Tammy just did a podcast 2 weeks ago, and you can find the podcast on any streaming services at AFSPA Talks. It's on our YouTube, it's on our webpage as well. And of course, Tammy has her own podcast, and this is the link to that, planyourfederalretirement.com/podcast. And if you have any further questions that we didn't get to answer today, or you might pop up later, you can always email us at outreach@afspa.org, and we will make sure your question gets answered. And if you submitted a question to our form that we have, and you're like, oh, I wasn't answered today, we do try to avoid answering questions that have a little too much personal health information. So if you want that answered, please reach out to us, and we will make sure someone at the AFSPA team gets that answered for you. It looks like we don't have any further questions right now. So I just want to say thank you so much, Tammy. You've been incredibly helpful. I've learned so much about federal long-term care insurance programs. And if you're wanting to rewatch this, it'll be available on our YouTube at AFSPA Cares. And please be on the lookout, because if you aren't aware, open season starts very, very soon, November 13th. We already have our open season page available on our website, aspa.org/FSBP/open season. So you can see all the new benefits, the premiums that we've updated, and you can also see a list of all of the events and webinars that we will be doing. Kyle will be hosting those webinars at all different times so that everyone across the globe can attend one. And yeah, just get ready for open season. And otherwise, Kyle, Tammy, anything else to add?
That's all I got. Thanks again, everyone, for listening. I'm glad everyone's taking an interest in this, because it is such an important thing to plan for.
Absolutely.
The only thing I want to reiterate is that if you are enrolled in federal long-term care insurance and you've got changes out there, just remember that if you want to talk to them, if you have until November 9th to contact them and to take action on the letter that was sent to you. Otherwise, you will see, if you're one of the people affected by it, you'll see the higher premiums go into effect starting in January and phased in over the next 3 years. So just please keep that deadline in mind, because it's the last business day before we might be talking about long-term care during open season, just touching on it, but it'll be too late to make any changes at that point. So Tammy, thank you very much. Maddie, thank you as well.
Of course. And we will see you guys at the end of November 30th, for our next AFSPA Live. Thank you,
Thanks,
everyone.
everybody.
Thank you.